Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is October 5th, Wednesday, and the market, well, it is a tale of two cities. We're up on the Dow, but the Nasdaq not doing so great. It really comes down to the fact that it looks like we're seeing a lot of strength in the oil stocks. We're starting to see a lot of strength in the oil stocks, but Tesla and other stocks like that, not so much. So very interesting. Um, Dow Jones basically turned positive, but the Nasdaq, of course, is off. We came through a very nice buy point on Exxon. I want to show you this interesting, and I still think this is potentially actionable. I still think this is potentially actionable tomorrow. I did not buy this one today, but they had great earnings. Exxon had great earnings, and they just popped right up very, very nicely, and it's in this consolidation base, and I do think it is still buyable. I'm looking on the technicals here, how far off I'm looking on. Let's go over to the daily chart and look at the 21-day moving average, because that's going to give us that's going to give us the buy. That's going to give us the place that we can enter this trade. And so I'm looking here, and in the 21-day line, we're a little bit high on the 7.51. Typically, we want to buy this one about 5% of the 21-day exponential moving average. So, but I still think even with that, Exxon will give us another opportunity tomorrow to get into the stock. Just wanted to kind of run down a bunch of things here. The checklist, very, very strong at basically 89%. The only thing, that, of course, that it is lacking is it's not being accumulated as much by other companies. Part of the reason is that they're already there. There's currently 3,065 different funds that are currently in Exxon. Very, very strong, of course, on that. So definitely something that that is definitely doable here. Just kind of want to put up everything on with Exxon here. I do think it's going to give us an opportunity to come back in. Now, interestingly enough, today I did not buy Exxon. I bought a company called Cheniere. I rebought it. I've owned this one, taken profits, and then recycled it for some reason. There we go. Okay, so hopefully there we go. It's letting us go back there. Yeah. So what's going on here, of course, is that this is giving us an opportunity now. With other shares like Tesla, of course, they're moving down. I don't recommend. Right now we had this situation with. For some reason, I'm getting. There we go. Let's move it back. There we go. Okay, so with today's market action, basically we are up on. Let's see if we can move this over to there. There we go. Today's action here, we're basically up on the S&P just barely. On the Dow Jones, of course, this is the one that really had the strength. That was up about a third of the point, but the Nasdaq. That's where all the tech stocks live, and of course they're doing poorly. So there was an agreement between Saudi Arabia and Russia, it looks like, to cut production. So it's looking like, at least for right now, it's looking like we're going to see more. We're going to see probably more strength and less strength in some of the other shares. Also want to bring up, show you what I'm currently in. Currently, I'm in two stocks. One is Dino, D-I-N-O, and that is that was down a little bit today. And I'm also in LNG, also a liquefied natural gas play. I'm more than likely going to be buying a half position in Exxon tomorrow, it looks like. Also, Chevron is looking very, very good. But of course, we're having issues regarding some of the other, some of the things in the tech sector. So that's really where the problem has been. All right, let's take a quick look at some of the questions. Thank you very much. Let's look at Tesla, because that one was off so much. and I think that we can definitely take a look at that. So let's look at Tesla. TSLA, it's down, of course, today. Right now, you're starting to see with this inflation, you're starting to see a movement back towards, really the old-fashioned technology, and not the technology, not the electric car technology. The Unfortunately, the real reality with the electric cars is that it's going to be a niche market for a while, I think, because the grid just does not have the capability of supporting as many electric cars as possible. Now that may change in the future, but right now, not so much. Um, Tesla was down significantly, and it's down after hours as well. And the thing about it, and I want to point this out here, is that we had strong selling here. It's above the average line. We did some buying yesterday, but the trend on um, Tesla right now is down, and I think that it's going to come down really to the probably the consolidation, which is about at 220. But just right now, it's just basing out. I haven't been trading it. As you know, I did quite well in this stock about a year ago, very, very well, but just not the time for the stock anymore. And I just think you got to stay out of Tesla, and you got to stay out of, the strength in the market is primarily in the oils. I mean, that's just a fact. And that's just sort of where where the strength in the market is. And so that's kind of where I'm going, at least for right now. So yeah, take a look, Charles. Thank you. Let's look at MPLX. I don't know MPLX. Let's see if I can uh, bring that up. MPLX. Let's do a quick. Um, MPLX owns and operates midstream. Okay, I'm definitely liking it. I'm definitely liking anything really in the energy space right now, because with that situation um, with Saudi Arabia and OPEC plus, we're definitely looking probably at higher oil prices. I mean, that's just a fact. I mean, they're cutting back production. Um, would I buy it here? Well, I'd be a little bit concerned on this one, Charles, because we're still below that 200-day moving average. I just don't like to buy anything below that 200-day moving average. It's sort of a bridge too far for me. So below this 200-day moving average, that's this black line here. I am not really a buyer. It's not what I'm looking at. It does have very nice relative strength, very strong, 89. But remember, because the overall market has been declining, the relative strength of even the ones that are just holding up has improved. So, but again, this looks good. I would not buy it because it's below the 200-day line. Give it a little bit of time. I'm looking to see kind of the fund ownership in this one. 160 funds are in this one. So that's pretty good. Checklist is excellent, 89. Uh, and on the technicals, let's take a look how far off the 21-day line is. Well, it's pretty close to 21-day line. This is not a bad place to buy it. If you were going to buy it here, would be at the 21-day line. It's 1% above that, but it's still below that 200-day moving average. So I probably would pass on this one, just because I think there's better stuff. I think you want to buy something even. I think what you want to find out here is the strongest. Are the strongest ones, and so I would be very careful buying it at this level. So on this one, I would just say pass on pass on this one. So that's kind of my take. That's kind of my take here on this on this one. I think that there's better fish in the sea right now, so I would be moving. Oops, I would be moving away from this kind of a stock. I think there's better ones out there, and just want to kind of if we do see an upward trend here in the market. All right. So let's take a look from Christine. Thank you, Christine, very much. Let's look at Oxy. Now, Oxy is a different story. Of course, this is being accumulated by Warren Buffett right now. and it does, it's in the right sector. Again, oil and gas is really, you know, for lack of a better, for lack of anything better, oil and gas is sort of where the action is in the market. If we are in a little bit of a dead cat bounce, I do think we're going to come up a little bit on the, I do think we're going to come up a little bit on the S&P, but for right now, we can go long, but I just think you got to be careful what sector you're in. Really, I think right now the sector to be in, of course, is the um, is the oil and gas sector. So looking at Oxy here. Let's see if I can take off the markup tool. For some reason, it's not. Yeah, there we go. All right. Yeah, what I'm doing here is I'm taking off the marks that I've made on this one because I've been trading Oxy as well. Here's the thing: we're in the buy zone on this. I like this a lot, Christina. We're in the buy zone. We're above the 200-day moving average. I'm liking that. We've got very strong relative strength at 98. I'm liking that. We've got accumulation. We know we have accumulation by Warren Buffett. We are right about at the 21-day line. I think this is viable. I think this is absolutely viable here. This has got a 100% checklist. So I think Oxy is viable at this level. It is up just slightly after hours, about 4 cents at 67.78. So I definitely think Oxy is viable here. It's in the buy zone. It's above the 200-day line. It's got a 100% checklist, and it's in the right sector. So I think you could definitely go ahead and nibble at this one. What I would do here probably is, Oxy is viable now. And what I would do is, if you bought it around this price, I think you would have a pretty good buy here. It looks like it is moving on an upward trend. I think we're going to get a nice reversal off this cup with handle formation. So I think this is viable, and it would not be a bad buy. Now, would I go in all on this? Absolutely not. I would go in with maybe a quarter or a half position. Now, what do I mean by a quarter or a half position? Well, if you take your portfolio and you divide it up into 8 pizza slices, think of a quarter position as being 1/4 of a pizza slice, or really very small amount, about 2.5% of your portfolio. So I would probably go in with a quarter position and then maybe a half position. You just want to nibble. You don't want to be you don't want to dive in this one too deep because the market is still in a downtrend, and because of that, it's very treacherous, and we don't want to overexpose ourselves to the market right now because we are in a downtrend. So be very very careful here. Charles is asking also about Oxy. Thank you very much for that. I appreciate it. All right, let's see. Jim. Tesla's down. I shorted it. Going back out. Ah, geez, I feel for you. Yeah, right now Tesla is sort of in a consolidation, and I'm not short any positions right now, just because we're having this dead cat bounce, and I just don't think this is the time. I believe it or not, I don't think this is the time to be short. I did a few shorts uh, a little over 2 weeks ago, but I've pulled back on that, and I'm not short right now. So just kind of the way to go. All right, let's look at for Charles. Let's look at Microsoft versus Intel. Now, I was talking about Intel on the show yesterday. Um, obviously, for a short-term play, I don't think Intel is very good, but it has lost so much of its value that I think that if we take off our can slim hat and we put on we put on the kind of the value investor hat, this one might be potentially a very good buy. And so let's kind of look at the here we go. Let's try to get the chart up here for everyone. There we go. All right. So here's the chart for um, here's the chart for Intel versus Intel versus Microsoft. As you can see over the last year, Microsoft has performed better than Intel, but they're both down. This is the problem with the Nasdaq stocks, really. If you bought $100 worth of Intel and you bought $100 worth of Microsoft a year ago, you'd be off about you'd be down about 12% on Microsoft, but you'd be down a whopping 45 to 50, almost 50% on Intel. This is why I think that, I normally don't say this, but I do believe that Intel is sort of on sale because we're at such a level, such a low level. Now, am I buying Intel right now? No, I'm kind of waiting to see what's happening with Intel. I'm still a little bit leery of this because, this is just not my style to do these deep buys like this. I'm not. I'm a cancel trader. I'm more of a momentum trader than I am a value investor. But desperate times call for desperate situations. Let's look at the Intel chart. INTC, of course, is the symbol for Intel, and all right. With the Intel chart, as you can see, we've moved way, 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 way down. And over the last year, it's just been this slide all the way down, all the way down, all the way down. Right now, Intel has a relative strength of 12. That means that 88% of the market is doing better than Intel. So this just shows you the weakness in the Nasdaq stocks. Right now, in our trading, in our sort of with our trading hat, we want to be out of the Nasdaq altogether. That's why I'm primarily in the oils right now, and not in any of the Nasdaq stocks. But but this is such a low price for Intel. Intel is trading at 27.61 right now. Do I think it'll go lower? Possibly. It really hasn't bottomed yet. I would put this one on your watch list. I wouldn't buy it now. I would wait some more because I think there's going to be even more demand destruction on Intel. And I think it could actually even go lower. I think it could go possibly down to as low as about in the 20s. If we look way back on the monthly chart, and here's what I'm going to do. I'm going to just put that monthly chart on. This is going all the way back, basically to this is basically going all the way back, to 1989. As you can see, uh, it was this is a split adjusted chart, so it actually wasn't trading at two, but on a split adjusted basis, it is now. The last time it made its high was way back here in 1999. This was right before the crash. This was right before the major crash. Now, if we go forward here to 2008, that's a critical time as well for the market and everything. In 2008, we can see basically that it made its low, and the low it made in 2008 was 14. Okay, right there, 14. That was the basically well, actually, yeah, about that was the low that it made, about 13. So the question is, right now it's at 27. So I do believe we're probably going to see it. This was one of the resistance points here, as you can see, that went way back to 2014. The next leg down, if we get a leg down, I don't know if we will be here. Oops. And that is basically at just about 19. So I do think if we move back to about 25 or so, this is support here. So we may have support here at this level. That's why I'm thinking this. That's why this stock is getting very interesting to me. But still, it's losing relative strength. So I think it has a little ways to go. I'm going to be very, very interested in this stock at about 19. And I don't know if it's going to get there. That means it has to go down 8% from here. But that is a possibility with Intel. That is a possibility. But again, I am just watching the stock. I haven't bought it yet. But bottom fishing is not a specialty for me. And I'll be honest with you, because I'm a trend trader. But this one might be. I don't think Intel is going to go out of business. But I think that we have a situation where if we could buy it below 25, I would be getting very interested. We're at 27 right now, so that might be potentially a place to buy it. All right, let's look at TPL. TPL is Texas Pacific Land. Now, this is actually based here in Dallas. Interestingly enough, it's the old Texas Pacific Railroad. But it's basically a royalty trust. It's a mineral royalty trust, and this is one of the most expensive stocks on the market. It was up, of course, today 13%, which is incredible because essentially, this is a $2,000 a share stock. But this is with the price of oil. One of the things is the companies that own a lot of oil in the Permian Basin, and that's why Occidental is a good buy too. This is where we want to look for the strength. We want to look for the strength in the operators that are in the Permian. The operators that are in the Permian are basically Exxon, also Occidental, Texas Pacific Land. This is a land holder. They own land. So, could you buy this one? I think you could. This is a volatile stock. I think it's likely to go higher. This is not bad. I like this one a lot. You probably couldn't buy that many shares of it. It's an expensive stock, and it's very volatile. As you can see, it went up today. It went up $236 a share. So, but I do think that it's on an upward trend, and it has been performing extremely well. So let's look at that's. I'm sorry. That's what for the year. Let's look at the daily chart on Texas Pacific Land. There we go. Yeah, it's really not in a buy zone. It's really too far extended from the 21-day moving average. But if you could buy this, if this pulls back to the 21-day line, that's where you could possibly get into it. There was a buy point in May. Boy, that would have been good if I had gotten in there. Look at that. There was a buy point at 15.20, and then it then it pulled back, but it's moved higher. It's really moved nicely. It's up $300 from there. So this is a potential one. I wouldn't buy it here. Why? Even though with the increasing with the increasing volume here, I still think that this one it's just too far extended from that line. So I want to wait for a pullback on this one, but if there is a pullback, I may be. I actually think this is good. So, what I would do with TPL right now is I would be watching TPL. So I would watch Texas Pacific Land, and it is it is it does pay tremendous. Oops. It does pay some tremendous dividends. Let's look at their dividend history. I'm going to look to the chart here for the payouts. It's had some their profits this year. Their sales are up 64% just in this last quarter. Profits up 100% in the quarter. So this is one of the top performing stocks. Again, this owns Texas Pacific Land owns mineral rights in the Permian Basin. So that's really key. Also, we have increasing fund ownership. Again, this is a niche stock. Not a lot of people have ever heard of it. Um, Mostly, this is owned by very, very wealthy individuals. That's typically the way it is. The only thing I don't like about this one, it's a PE ratio of 40, which seems to be a little bit high for this kind of thing. So I think you're better off buying, Oxy or some of the other ones. But very interesting stock. I would watch this one right now. I would not be a buyer of it just because I think it's a little bit rich. I mean, I think it's a little bit high priced for where it is. But excellent, interesting, very, very interesting stock. Okay, let's look at a few more. And 3M, interesting, interesting. I haven't looked at the chart for 3M in a long time, so that is interesting. MMM, of course, is the stock. 3M, three is M's. Minnesota Mining and Manufacturing is, of course, the company. It's the 3M company. All right, let's look. Definitely not a buy. It's in a downward trend. Oops. Oh, for some reason, I lost the. There we go. Okay. Oh, jeez. Sometimes this is trying. There we go. Let's just change the shape of this a little bit. Come on. Let's make it smaller because that way we can see it better. There. All right. So go back to the daily chart. All right, little bit of a. There we go. Okay, so we're gonna get maybe we'll get a chart here. No, I don't know. I don't know. It's not. We're a little bit frozen on the screen, so hopefully there we go. I think we're gonna get no. We're gonna need to refresh this. See if this will let us refresh it. There we go. 3M. All right, this is not something I would be a buyer on. It just is not a good chart, as you can see. Oops. We have a downward trend on it, and just not something I think we want to be buying here. So I would not be a buyer of this one. Their sales were down 3% last quarter, so it is not looking. Well, gonna get it. It's my screen is refreshing here. On. Oh, all right. So if we take a look at the daily chart on 3M, we went up. We went up to the 200-day moving average, and it hit the 200-day moving average. This is one of the reasons why it's really not a good idea to buy anything below this 200-day moving average, with some exceptions. Just not a good practice. It's come down. It's going lower. It's got earnings in 20 days. The numbers are not bearing out. They're not looking that good for 3M. Basically, for 3M, we've got a situation where the estimates are they're going to be off. Their sales are going to be off 2% this year. They're looking for a slight increase next year of 4%, but overall, not a good situation for this stock. Down 3%, profits are down 10%. So I'd stay away from this one. So I would be avoiding um, avoiding avoid MMM 3M. I don't think it's a strong stock. I don't think it's in a good area. And overall, I just don't like it. And yeah, there we go. All right, let's see if we can take a question from TikTok. And we're just about at the end of the show. So, okay, Ticker, what do you think of? I don't. Oh, Palantir. Let's take a look at Palantir. Palantir, unfortunately, has been one Peter Thiel stock that has not done well. And PLTR, I was in it earlier, but I just haven't touched it. Again, these Nasdaq stocks just have not been producing very well. So I think you just got to stay out of them for right now. But Palantir, if you look at the chart here, it is currently at a 14 relative strength, which is not good. That means that most of the market is doing better than this. You can definitely see this is a downward trend. Currently trading for $8.42. Will it bounce? I don't think so. So, this one actually could go out of business. I'm not expecting that to happen, but this is a very weak stock. They did have nice earnings, though. Their earnings were up 25%, but just doesn't look good. Their PE ratio, it's 121. That's just not good enough. I mean, when we've got Exxon with PE ratio of like 7 or 8, I mean, this is not viable, really. This is not viable right now. It's a cool stock. I do a lot of cool things, but I just think it's not a stock that you want to be in right now. The market is just unforgiving right now for the tech stocks. You want to be out of the tech sector at all costs. So PLTR is a no. And so I would not be looking at Palantir at all. I think it's yesterday's news, and like so many of these things, when we had cheap money out there, these kind of stocks did really well, but not anymore. Right in this market with high inflation, and so bail on the SQQQ. I think you better be careful with the SQQQ. That is a short on the Qs. I do think we're going to get a bounce on the Qs, but I would be out of the SQQQ right now. Just looking at that. This is the question from TikTok on the SQQQ. So let's look at that really quickly. And This I do not recommend trading this stock right now because of the potential volatility, but, let's take a look at it. Let's look at the chart on it, and, as you can see on the SQQQ, it's way, way down here, basically at the bottom. It is up a little bit after hours. It is a little bit of a bounce. There was a buy point on it with a consolidation at, 52.67. It's currently at 51.70. I would be careful with this one. I would not buy this one, even though it is sort of trending up. These are tough. These are really ultra short term. The SQQQ, you really don't want to hold more for more than about 3 or 4 days. So I would not be a buyer of the SQQQ. I don't think it's really an investment, unfortunately. Ah, and this will probably be the last two. Let's look for Roman. Let's look at this is interesting. This is in phase solar. This is the problem with solar stocks. It's highly dependent on China, and so I think you've got to be really careful in the solars. This is one of the reasons I didn't really go into many of the solar stocks, even though it has been a top performing sector of the economy. There was in phase. It was down. It's down today. Not a whole lot, but I think I think if you look at the daily chart, I'm going to go over here to the daily chart. You can see we'd have this huge drop, basically from about 300 to 250. I mean, that's a lot. That the It dropped basically um, almost 10%, and with double the average volume. So this is signal. This is a signal right here. This is a signal to get out. If you're in it, I hope you had stops on us because this is a signal. This is a signal to get out of the stock. Basically, that this is just a signal to be out. So with ENPH signal to get out. And that's really what this is telling us here is we need to be out of this stock because it's probably going to go lower. It's broken the resistance at the 10-day line, and now that it's likely to go even lower. If we, I'm sorry, at the 50-day line, and so it's likely to go even lower. And I think you're going to see it move significantly lower. So I'd be out of this one. Again, you always want to set your stop loss in situations like this so that you're not caught flat-footed because this market is very volatile and it reverses extremely quickly. All right, let's look at Mr. Jeet is looking at WTI. I think you're talking about West Texas Intermediate crude, but this may be a symbol, but it also sounds like it's West Texas Yeah, okay. WT offshore. That's interesting that it has that. Okay, so this is definitely where you want to be. You want to be in the oils. It's moved up very nicely. This is a under $10 stock, 99 relative strength. Unfortunately, this one is extended, so I would stay out of this one right now. Um, you know, basically, WTI is extended. I would stay out of this one just because it is extended right here, and we don't have a lot of volume. All right. Well, looks like we're almost at the end here. Um, oh, Devon. Let's look at Devon. Let's look at two more, Devon and Real. Devon Energy Future. Well, I think Devon is a great stock. DVN. Now they did go through a bankruptcy, so there was a reorganization on Devon, but we're coming out with a cup and handle here, increasing volume of sales. Now again, a lot of oil stocks trade the same, but one thing I want to point out here on this is that they've had extremely good earnings. Their sales are up 133% last quarter, profits up 332%. So that's awesome when it comes to it. Also, the PE ratio. Remember, we were looking at those PE ratios on stocks like Palantir. They had 121 PE. This is a 10 PE. So producing $6.79. It does look like their estimates. They're looking at a very strong fourth quarter, and they're also looking at a strong 2013. So it's at the strength is on this one. Can you buy it here? Well, let's take a look. It is a reversal, so that might be a good place to buy it. I think there's a lot of future for Devon. Um, yeah, you could buy it. It's probably going to pull back a little bit here. Let's see how far above that 21-day line it is. And it's got a 100% checklist. I'm liking that very much. It's a little bit high off of the 21-day line. Here's what I would do with Devon. I would wait and probably buy it. I think you can buy it. Try to buy it a little bit closer to the 21-day moving average. Um, so if it were to pull back, say to about 65, 66, I would try to buy on a pullback here. I like this one a lot, and so I would for DVN try to buy on a pullback to I'm going to say about 66. That's going to be. I don't think it's going to go any lower than that, but try to buy this one. Oops. Try to buy this one on a pullback to about 66 or so, 65, 66, if you can get it back there. You need to be closer to the 21-day line in order to enter this one. But it's a good stock. It's in a good industry, and it's coming off a very nice pattern. It's a cup with handle. It's above the 200-day moving average. So it's set up very, very nicely. Also 100% checklist. Well, everybody, thank you so much. That's probably it for today. Here's the thing. If you are not already a member of the Action Trade Alerts, please do so. Please jump on over to www. Dallas Trading Floor. Okay, oops. www. Dallas Trading Floor. And just please also, this helps us out a tremendous amount, of course, is if you could like the show. I always like that because that helps us get us out there to more people. Also, if you're not already a member of the free action trailers, just go to www Dallas Trading Floor and you'll see it. You can sign up. It's easy. It's first and last name, and you'll be on the list for that. We'll be back tomorrow at 5 o'clock. Hopefully, we're getting a little bit of strength now. Here's the thing: I want to caution you in this market. It's not a time to be that exposed. Currently, my exposure to this market is very, very minimal. I basically only am exposed with one full position. I have two half positions, one in LNG, which is Cheniere, and the other one is in Sinclair. And I may buy a position in Exxon. I probably buy a larger position in Exxon just because it's a little bit less. It's a little bit more stable stock. But be careful. You want to be mostly in cash right now. We're in this dead cat bounce, but again, it is a very, very volatile market, and it's just the kind of market that you can get really killed in if you're overexposed. So be very, very careful here. Let's say this is the last question. Industry group analysis. Oh, okay, great. Uh, yeah, definitely. I'll be talking tomorrow more about the industry group analysis for um, the industry group analysis. Did I do that September 17th? Okay, I'm going to update that on the on I'm going to update the industry group analysis for everyone tonight. So if you go back to the Dallas Trading Floor, you'll see it, and we'll have an update for you on that. So thanks again, and happy trading, everybody. I hope everyone's well. Again, stay mostly in cash in this market right now. That's really the thing to be in right now. But we are getting a bounce, and we it probably will go for a little bit of time. So that's kind of my thesis on it. But I'm mostly in cash, and the other things I'm really buying is oils, and that's about it. So happy trading.